to know our cost. We need to know our cost since we need we require to know at what price we are selling so that we are profitable. That's what I think.
That's one of the main things. That's one of the main things, and that's one of the things that we're gonna learn here. But hopefully you've got a good grasp on chapter 2, because I think you will be ready to dive into chapter 3. In this chapter, we're going to review over a lot of concepts again at the beginning, just at the beginning. Oh, sorry, I haven't opened. But obviously we will try to do exercise for get it in order to get it more clear this time. So we're going to add in debits and credits journal entries to keep on going your learning with the T accounts, and a little bit more of cost concepts. So job order costing systems are used when we are making many different products. Probably those products have something unique and different about them. And when we say products, that could also be a service, what I told you. The second point here, products are manufactured to order. So we are not making tons and tons of the same thing. We are making something a little bit different each time, something that can be made to order. Or like I said, it could be even a service, and number 3, orders that require tracing or allocation cost to each of those jobs orders. So each job, each product has something a little bit different about it, or at least it's customizable in some way, and we track our cost then by job. And that's what we call a job order costing system. So yeah, here are some examples. They say Boeing, if we are making aircraft, they just don't make cookie cutter airplanes on the assembly line. No, they are made to order. Are you getting the point?
Yes.
Okay. So when a customer orders airplanes from Boeing, it's a very specific order for a specific quantity, and they make them exactly to the specifications. They've agreed upon they are not identical. And the other 2 examples I have in here, it's Bechtel International. It's dedicated to large scale constructions, and really any type of construction, whether it's large or small, it's kind of irrelevant. If we are building commercial buildings or houses, it doesn't really matter. Each of those jobs is somewhat unique, and we don't assume that they are all identical. And then movie production, like Walt Disney or any other studio, when you make a movie, each movie production process is unique. There are there are some similarities, but the cost of making an animated film is a lot different than the cost of making Star Wars, or versus making Monty Python, or I don't know what you guys like, Avengers. So obviously these are clearly totally different production budgets. So we're going to track cost by job. We don't assume that they are all the same. They are all somewhat unique in nature. So that's why I explained you, this will also apply to services. So the basic cost flow that we are looking at, we've got direct materials and direct labor in here. Do you remember those? Those are our direct costs, and those are going to be applied directly to the jobs. So we are going to charge a direct material and direct labor to each job as that work is performed. So as we make our requisition materials into each job, as we work hours on each job, we have to track those hours worked on each job. Okay? Do you guys have a pen and a notebook as Arturo is writing down, hopefully for the class?
Yes.
Sir, could you go to slides behind, please?
Yeah. In this one?
No, the one before that. That one.
Okay.
It's just that it's like cut in the middle when it says like tracing or, and it, for me it's like up to that part. And I cannot see the full slide.
Do you see it now?
Yes, yes, yes.
But at the end, did you get the point, the main point of the job order costing? So the final result of this process will to get to have an approachable way to cost things, mainly because you have a fixed cost, or do you remember the manufacturing overhead, the MO? And you need to distribute that MO in order to proper know the cost of things, right? And why you need to properly cost things, because you it will give you some guidance in order to know how much to charge to customers. What if you are selling below a break-even point? So that's the importance, guys. Now you know how you can apply it, how it's been applied in the industries here. And how it's been done, it's applying those cost concepts from last chapter into each job. And each job you need to track, in each job you need to track the direct hours of labor or direct materials, okay? So now,
Teacher, what do you mean by each job?
that's a good question. I will get to that.
Okay.
You will understand. I will teach you guys how it's been done through the history, okay? And why I'm telling you this, because in the past, they managed to do this process all in some sheets that I will teach you. At the end, this processing or this cost processing, it's been done in the ERPs that I have told you a lot of times that that's the systems that all companies use to administrate. That it's an automatic procedure, but they do exactly the same as the sheets, just in a software, and that's it. Okay, and we will understand what it's a job. So, but just get the definition right now on what do you need to do to each job, and because we have our indirect costs. Remember the MO. Everything that is indirect is going to be dumped in the MO bucket, and we're going to accumulate all of the MO, all of those indirect materials, indirect labor, and all of those other indirect costs. Do you remember what type of stuff goes into MO? It could be
everything that it was not a direct labor, right, or indirect.
Exactly. Very good. Everything that
Nice.
It could be rent, utilities, insurance, depreciation, property taxes, all related to our manufacturing facility, and a lot of other things. Those are just examples. So all of that's going to be accumulated in the MO bucket, and then we're going to allocate MO, where we're going to apply MO based on an allocation basis that I will teach you how to do. Select the allocation basis to those jobs that we can trace more directly to the jobs. There's a reason it's called indirect costs. It's not easily and conveniently traceable. So we're going to put it all together in the MO bucket, and then we're going to come up with one method of allocating the MO over to those jobs. Okay, so in here, Andrea, we have an example of a job. And remember that the job is, it could be an order from the customer, like give me an airplane with these capabilities. I want an Airbus, it's A320 or A220 with instead of 150 seats, I want to be 180 seats, like Viva Aerobus. And do you get the point what it's a job order?
Yeah, like each thing they ask you for.
Yes.
Okay.
So this is an example of a job cost sheet, and I told you this is on paper how it's been done in the past. but you do exactly the same in the ERP, okay? Here's an example of the type of information we would tracking. It's some type of job number in the top part, the job number 8143, a date, department, all of those. So what we are making, it's a wooden cargo crate, okay? And what we're going to see what it looks like. It looks like to track the cost for this job. So first, we will have our direct materials. So Berco has a materials requisition form, and they are requisitioning probably some amount of wood or lumber to build this crate. So they've specified exactly what they are using on this job, the unit cost, the number of units, and the total cost. So you have $116 of materials authorized by, obviously, by a supervisor. So in here you have the $116 on the job cost sheet for direct materials. So we specify that we've tidied our material sheet with our job cost sheet. So we're trying out our documents, and again, they are paper on in a computerized system. We want to tie our documents together to create supporting evidence of what we're doing. So next, we're going to deal with our direct labor. Until here, we're good, right? Direct materials, easy. Direct labor, how are we gonna track the direct labor? You don't have you haven't seen the how it's called, the clock in the manufacturing plants, like that's a way.
Yeah.
That's right now it's more sophisticated. You just have like a clip, and with sensors you know where are you in what part of the manufacturing plant, where are you. So anybody working on this job has to track their time by job. So they have clocked out, we've got in here 8 hours of work at $15 an hour. So $120 of labor. And we will see that $120 again in the job order cost sheet. We plug in our direct labor, hours and costs. So we have missing only the mow. The direct costs are easy. They are conveniently and easily traceable to the job, but we got to figure out what to do with the mow. So let's go to predetermine overhead rate. Sorry guys, I forget the rate. The first thing we need to do is compute and predetermine the overhead rate. And how we will do that. So we need to talk about a bit about the figure out how that works with mow. Well, first let's talk about allocation basis. An allocation base, like direct labor hours, labor dollars, machine hours, is what we're going to use to assign mow to each of our jobs. So we're going to have some type of allocation base. And why do we use an allocation base? Well, the first because we can directly trace this mow cost to the jobs, right? That's why it's indirect cost. So to start with, it is impossible or difficult to trace overhead costs of particular jobs. So we can't trace it. We are going to have to figure out a way to allocate it. So the next point is manufacturing overhead consists of many different items ranging from the grease used in machines to the production manager's salary. Again, all indirect costs, virtually impossible to trace directly to each job. So we're going to need to allocate and see many types of manufacturing overhead costs are fixed, even though output fluctuates during the period. So now that's the interesting point, and we're going to explore that more. What happens when our level of activity, our output, goes up and down? What does that do to the amount of mow that we're going to allocate to each job? So We'll address that later. I'm just planting a seed for you to think about. But what if we only have one job during the year? What if the business is really slow this year? What will that do to the amount of Mo that we end up allocating to each job? Hopefully, a little bit later, we'll be able to answer that. Once you understand more about how we use allocation basis and predetermine overhead rates. So let's keep going and we will revisit that. So the next question would be, so where are we gonna allocate Mo based on the predetermined overhead rate, which we call POHR? More acronyms for your career. Sorry. We are going to allocate Mo using the POR. Sounds like we are speaking a foreign language, but we're just speaking accounting. So we are going to allocate this Mo using the POR applied to overhead to jobs, but the predetermined overhead rate is going to be computed before the period begins. So we're going to be basing that on estimates. Now, if you remember when we talked about the difference between managerial accounting and financial accounting, managerial accounting is focused on timeliness and relevance. So it's okay that we are using estimates. We can't wait until after the fact that financial accounting accuracy, it's not based in getting it right 100%. Do you guys remember the materiality concept?
I remember you mentioned it, but I can't tell you by memory what it is.
Oh, that you will apply that to your both classes. The materiality, what the materiality concept tells you is that you don't need to get it right 100% in accounting. What? But it's debit and credit. It needs to be 100% accurate. Wait, where are you? Hi guys, we have ladies in here. Come on. The materiality, it's about, it's the financial accounting. It's not the purpose is not to get it 100% right, because at the end you have things that are way over your control. I give you an example. In financial accounting, you are obligated to have an accrual regarding the risk that you have from being from suffer a lawsuit. How are you going to calculate the risk that you have of receiving a lawsuit? And you are obligated to have an accrual. What is an accrual? Who can tell me what's a financial accrual?
It was like document that you're like obligated to pay for the future or something, right?
What you would do right now that you know how to register properly in accounting, what you do with the accruals is to debit an expense and leave it as a liability. What you are doing is affecting in the period that you want. For example, this risk prime, or yeah, risk prime that I'm telling you you have to register is for this year. When you finish this year, you need to do an accrual regarding this type of risk, because at the end, what you're assessing is the risk from this year. So what you do is expense that amount in this year P&L. P&L, it's profit and loss, guys. Always remember that. And debit and credit liability for risk premium of the risk of receiving a lawsuit. And how you calculate that? You need to request to your lawyers all the lawsuits that you have. Probably you have a lawsuit from an employee, from a customer, I don't know. And they will tell you, and calculate the chances of losing that lawsuit. So if you lose it, you are able to know and track how much you could be losing in that year, right? You probably will pay it in next year, or in the future, in 3 years or 5 years. Well, you already expense that out in the year that it was carried out. So as I'm telling you, this is an estimate. So at the end, the accounting or the financial accounting, the financial reports are not 100% accurate. What you use, it's the materiality concept, which tells you that the financial information that you are submitting, it's properly done according to the IFRS standards, and it doesn't have material errors, meaning that if your whole company it's worth $10, it won't have a 5-cent deficit. Probably there would be a mistake for 5 cents, but is it material for you if it's worth $10? Is it material for you to fight for 0.5 cents? Okay, so getting back, we are going to base this on estimates, and that's okay. We have to be okay with that. So predetermined overhead rate is taking your estimate total manufacturing overhead cost per the coming period. It's estimated MO for the upcoming period, and we're going to divide it by the estimated total units in the allocation base or the cost driver. So that allocation base should be the cost driver, meaning what is causing cost to happen. Is it making more units? Is it working more hours? Is it working labor dollars? Is it machine hours? So in the real world, that would be a tough decision to make. And in the textbook, they are going to tell you what to use as your allocation base. But just think about this. If we're taking an estimate and dividing it by an estimate, how often do you think we're going to be exactly right? An estimate divided by an estimate. And that's what we're going to use to allocate MO to the jobs. How often do you think that we're going to be spot on?
Almost never.
If you maybe said never, that's probably a good guess. So there is a process. There is a process that at the end we are going to true up those differences. So don't worry, we are going to work it. We just don't estimate and walk away. But we need to have something to use as an estimate during the period, right? Yep. Okay. Why? Why do we need to estimate? Why can't we do this after the fact with accuracy? Predetermined overhead rates that rely upon estimated data are often used because, well, number one, we can't wait. Number one, actual overhead for the period is not known until the end of the period. Thus, that prevents us from estimating our jobs cost during the period. Well, who cares? Well, that's kind of important in terms of choosing how to price your jobs, how to bid your jobs to customers. How do you determine how much you're going to charge a customer for a particular job? You're just guessing. Well, hopefully it's more of an educated guess using the predetermined overhead rate, which it's still based on estimate, but it's definitely an educated estimate based on past data, based on our business knowledge, and it's just not a random guess. So the answer is we can't wait until the end, but we need to have predetermined overhead rate in order to accurately, well, somewhat accurately estimate our job cost during the period. And number two, the actual overhead cost can fluctuate seasonally, thus misleading decisions makers. So who knows what is seasonally?
By seasons. Seasonally, you mean? Like
Yep.
Temporadas?
Yes. And stationality?
Stationality, like you mean the difference between those terms?
Yep. What is stationality and what is seasonality?
Stationality, I believe that this is a trick question, firstly. Second thing is that to be stationary, you're like the same position, and seasonally you're changing by or depending on the season. That's what I try. That's what I think you're trying to say. Stationary.
No, stationality, station.
Oh, perhaps depending on the circumstances, you can change. Stationality, yes, and seasonally.
I'm asking because this is a very common used concept in when you are budgeting or when you are in finance. Stationality means you worked on you are speaking regarding stations of the year. What are the stations of the year? Summer, spring.
Those are seasons, no?
Yeah, but that's why I'm telling you that there's a difference between seasonality and stationality, because everybody mix up both of them. Seasonality, as you were saying, it's from seasons, yeah, but not the yearly or the year seasons. You can do like two months seasonality, but when you're speaking regarding a stationality, you're speaking regarding the whole year seasons, like spring, summer. Okay, and why I'm telling you, because when we get into the budgeting things, you will get both concepts. But it's important for you to get it, because the MO cost can fluctuate seasonally. Doesn't mean that in each season. It means that in the periods in your factory, there are maybe variable in some seasons. I don't know the seasons they have. Okay. What they are applying in the previous slide, it's that if our volume, our activity level is fluctuating through the year, we don't want to have these changes, these fluctuations in our overhead rates that is computed once at the beginning of the year. Or if we or our company decides we want to do it at the beginning of the quarter, that's fine. But at least we want to do it once ahead of time and not change it every day or every week. We want to look at the big picture and come up with a reasonable predetermined overhead rate. So we don't want to do it day by day or seasonally, because it might lead you to poor decisions, misleading data. Okay. So when we compute a predetermined overhead rate, first, let me say, I think this slide massively overcomplicates. It doesn't need to be this complicated, and we will talk about why. But we saw that equation in the previous class. It's a linear mixed cost equation where we will separate what is fixed and variable components, and which MO definitely is going to include both fixed and variable components. So what they are telling us here is that the predetermined overhead rate is going to be computed before the period begins. We know that. And they are suggesting this 4-step process. Well, in here you just have the third and fourth. But it's a little bit more, it's not that complicated that it needs to be. But I would start by estimating the total amount of allocation base. Okay?
Teacher,
Yep.
I'm sorry, I'm not quite getting the concept of allocation base.
Let's wait.
Okay.
You always ask the correct questions, Andrea, but because I have them ready for you.
Okay.
Let me finish this and get just the idea, and then we will review and do an exercise of allocation based and how we are going to pass MO into a job order. Okay. In order to get the final cost for per each job sheet.
All right.
Okay. So the first thing is to get the total amount of allocation base. So that's going to be our denominator, the bottom of the fraction, if you don't know what's a denominator. So we're going to estimate the total allocation base that will be required for the next period's estimated level of regarding the estimated level of production. And the step 2, we're going to estimate the total fixed MO for the coming period, and then the variable MO as a cost per unit of the allocation base. Okay. And we're going to use the following equation that it's the linear function to estimate the total amount of manufacturing overhead. So all they are saying is that we're going to add together the fixed plus the variable times the level of activity and get the total estimated mo for the period. Until here, we're good. So really all of that steps 1, 2, and 3, what they just said is that we're going to add up the fixed and the variable cost to get the total estimated mo for the period. And then we're going to use that to compute the predetermined overhead rate, dividing the estimated mo divided by the estimated allocation base. So let's take a look at it. So we have in here that another PIRCO example. This is the learning objective 2, apply overhead cost to jobs using predetermined overhead rate. Oh, so PIRCO estimates that it will require 160,000 direct labor hours to meet the coming periods. Estimated production level, okay, so they are basing it on direct labor hours. They believe that is their cost driver. That's their allocation base, Andrea. Okay.
Their estimation.
The direct, can you repeat the estimation?
Yeah, like they're saying that they're estimating that the direct labor hours will be 160,000.
Yeah.
For the coming production period.
Yep.
That's the allocation base.
Yep. That's it.
Oh, okay.
Okay, and so that goes in the denominator as you're watching. Do you see the formula? I already put it in there. So in addition, the company estimates total fixed mo at 200,000. So that's A. Okay, that's our A, and Y equals A plus BX, and variable mo at a cost of $2.75 per direct labor hour. So we're going to take $2.75 and multiply it by 160,000 direct labor hours. So that's BX. B is 2.75 and X is 160,000. So we multiply those together, we get 440,000. That is in here. Let me see. And we get to our total estimated mo of 640,000. So if we have an estimated total manufacturing overhead of 640,000, what is estimated total manufacturing overhead? Please explain to me.
The question was, what are we calculating when approaching manufacturing overhead?
What is the 640,000?
Like the amount of money we could potentially use in case, well, for the MO.
Okay.
Because they're multiplying the fixed mo and the variable mo.
Exactly.
Right? Okay.
Very good, Samantha. Exactly. We are getting all the components of the mo with the linear function. Remember that there is a variable assumption in the mo, and how you will assess that using an allocation. Okay. So now you get to know what's the total mo for this case scenario, and you just divide that using the estimated direct labor hours in order to get a POR per direct labor hour. So you have that for this case, it's valued in $4 per direct labor hour. And also using different product lines, it would be difficult because at the end, it's per product line, no? You would have to assess per product line. So we will get back into our And now that we have our predetermined overhead rate, we can apply it to our job sheet, right? So we get back to the old job, which is the A143, where we were making that wooden cargo crate. So we apply that mode based on the labor hours. So if it's 8 hours times a predetermined overhead rate of $4 per hour, and we get $32 of mode that gets applied to this job. So now we're going to take a look at the total cost and the unit product cost of that job using that plant-wide predetermined overhead rate. So, so really all we are saying is we are going to add it up. We are adding the direct materials, the direct labors in here. Direct materials, direct labor, and the mode. And we get a total cost of $268. So that's our total cost. And then that was for 2 units of you read the job sheet carefully. It was for 2 units. So we could say that our unit product cost is $134. Until here we're right? Did you get it? Direct materials, direct labor, manufacturing overhead, which is the difficult part that we had to get from it. And we get the total job cost sheet. Obviously, the total cost divided per the units completed, you get the unit product cost. So we have job WR 53 at NW Fabric in INC required 200 of direct materials. So direct materials equals 200. And then we will add our labor. So how much did you get for labor? $15 an hour times 10 hours. So our direct labor should be 150. And then we still have to figure out more. So we will have to determine our predetermined overhead rate. So how do we do that? They told us that they estimate the total overhead for the year will be 60,000, and they estimate direct labor hours were 20,000. So we have, Andrea, did you do that? What I'm doing?
Yeah, kind of. Like I have all that data, but I didn't know what was next. Yeah, I also did that division.
Excellent. So we have 38 hours per direct. Sorry, it's sloppy. Eh? I'm trying to do my best. So we have that $38 dollars per hour per direct labor hour was 10. So we're going to add in more of 38 per multiply per the 10 hours that the job order requested. Okay, so it's okay. Now you know the answer, guys.
730.